Hi everyone, I'm Nellie and I work in the Department of Rail and Public Transportation's Audit Department. Thank you all for joining this webinar today. I'm excited to share with you some common audit findings and lessons from the compliance reviews conducted by DRPT. In this webinar, we will talk about 9 recurring compliance issues that have come up often during our compliance reviews. We will review the regulatory requirements that guide us, look at real examples from our audits, and then I will share some suggested corrective actions to help you avoid these issues in the future. Our goal is to help you be better prepared for audits, improve your compliance, and make your projects run more smoothly. Here's the roadmap for what we will cover today. First, I'll explain the methodology we use during compliance reviews. Then, I will go through the 9 most common audit findings in order of frequency. For each issue, I will provide the relevant regulatory or DRPT requirements that apply, examples from compliance reviews, and suggested corrective actions that grantees can take to prevent these problems in the future. At the end, I'll wrap up with a short conclusion summarizing the key takeaways. Before diving into the issues, it's important to understand the methodology we use for compliance reviews. This gives you a framework for how we conduct audits and what standards we expect grantees to follow. Our compliance review process relies primarily on 3 main sources. The first one is DRPT's master agreement. This document defines the terms and conditions for grants funded by the Commonwealth of Virginia. The second source is DRPT's Grant Administration Procedures, also known as the Purple Book. This outlines the procedures grantees should follow to manage state and grants effectively. The last one is the Federal Transit Administration, FTA, Contractor Manual. Since many projects involve federal funds, the Contractor Manual covers expectations for recipient management and compliance with federal regulations. Together, these 3 sources illustrate how we measure compliance. During reviews, we check if grantees meet the requirements outlined in these documents. Now that we understand the methodology, let's go through the 9 most common audit findings we've observed during the last 3+ years. The most frequent issue is related to vehicle inventory records. To ensure proper oversight of capital assets, the FTA provides a clear understanding of how grantees manage, use, and dispose of assets. Grantees must maintain accurate and complete equipment records. All the elements mentioned in this slide should be maintained in the grantee's internal vehicle records. Maintaining complete internal asset records is the best practice to ensure accurate vehicle records. It's worth noting, however, that grantees who receive only state funding are not required to maintain all these elements in their asset records. What's more, all recipients of state capital assistance funding are required to enter asset inventory information in DRPT's Online Transportation Asset Management System, TransAM. This includes all state-funded vehicles and non-revenue vehicles such as support vehicles once they are placed in service. Additionally, odometer readings must be updated twice annually, on July 15th and January 15th, to help track vehicle usage and condition over time. In our reviews, we found that the vehicle identification numbers, purchase costs, and in-service dates recorded in TransAM did not match the grantee's internal vehicle inventory records. For example, in Table 1, we can see that there are several discrepancies between wins in the grantee's vehicle inventory records and Trans-Am. Table 2 shows significant differences in purchase costs between the two sources. In Table 3, the in-service dates recorded in Trans-Am do not match those in the internal records and require further investigation. These discrepancies cause confusion and make it difficult to accurately track vehicles. Discrepancies can arise from similarities in VINs, quoted costs versus invoice costs, and acquisition dates versus in-service dates. Also, assets records are not regularly reconciled. To avoid these inventory issues going forward, we suggest the following. First, assign one employee for data entry and another employee to review and verify the accuracy of the information entered into both the internal records and Trans-Am. These review and verification process help catch errors early before they are identified in compliance reviews. Second, perform quarterly data audits to verify the consistency of vehicle data across both systems. If discrepancies are found, investigate and correct them promptly. By following these suggestions, grantees could potentially reduce errors in vehicle inventory records and improve compliance. The second most common audit finding relates to issues with performance data reporting. According to DRPT grant administration procedures, to receive transit operating assistance, grantees should report unlinked passenger trips, UPT, vehicle revenue hours, VRH, and vehicle revenue miles, VRM, for all modes operated on a monthly basis using the designated SharePoint performance data reporting site. All performance metrics are reported by mode and validated by DRPT program managers on an annual basis before the operating assistance formula is run. During compliance reviews, we have seen large discrepancies between the performance data reported to DRPT and the National Transit Database, NTD, compared to the grantee's performance data records. For instance, the table shows a significant difference in revenue miles. Performance data discrepancies may be caused by timing differences in when data is gathered and reported, differences in automated passenger counters, APCs, or other systems, data system changes, and multiple data sources, and so on. It's important to clarify that DRPT reviews NTD performance data for comparison purposes only. Once NTD data is submitted, grantees are not required to go back and update it. To help prevent these issues from recurring, we recommend the following actions. Centralize all ridership and performance data in a single, organized location accessible to authorized personnel. This avoids confusion from multiple uncoordinated sources. Reconcile reported data with internal records monthly to identify and correct discrepancies early. Continue this reconciliation process a few months after year-end to ensure accuracy. Use basic data validation techniques such as checking totals, identifying missing values, and flagging outliers before submitting reports. Assign a second staff member to review all data reports before submission to catch errors or inconsistencies. Also, you can maintain a log of unusual events, such as service interruptions, which may impact performance data, and communicate these contexts to your DRPT program manager. By strengthening data management and review processes, grantees could avoid discrepancies and ensure performance data are reliable. The third issue we've frequently found is that multiple project reimbursement requests are submitted within the same month. The master agreement states that grantees shall submit project reimbursement forms no more frequently than once per month per project. According to our findings, some grantees submitted 2 or more reimbursement requests for one project during the same month, which is against DRPT policy. This can cause confusion and delay processing. To mitigate this issue, we suggest first, grantees maintain a reimbursement submission log, which means tracking every reimbursement request by project and submission date in a centralized log or system. Second, implement a pre-submission check process, which means requiring staff to check the log before submitting a new reimbursement request to confirm that no previous submission was made that month for the same project. Third, have the finance or grants management team review the log monthly to detect duplicate submissions and take corrective actions if necessary. The simple tracking process can prevent duplicate requests and streamline reimbursement management. If a second reimbursement request is needed within the same month, it's a good idea to check in with your DRPT program manager, who may pre-authorize multiple submissions when appropriate. Another common problem is related to record retention. Article 5.1 of the Master Agreement states that grantees must maintain all books, accounting records, and any other supporting documents for every project. Records must be kept for 4 years from the end of the state fiscal, June 30, in which the final project payment is made. Or longer retention periods are required for facilities and lands. Grantees should also require their contractors to maintain records similarly and include these requirements in subcontractor agreements. During our review, we found that some grantees did not have a formal record retention policy. Others have inconsistent retention periods that don't comply with DRPT's master agreement. For example, they might use the Library of Virginia retention schedules or other policies that don't match DRPT standards. In some cases, grantees rely solely on DRPT systems to keep project agreements rather than maintaining their own internal copies. To help prevent record retention findings, we recommend the following steps. First, establish and implement a formal record retention policy that aligns with DRPT's master agreement. Second, download and store all project agreements, applications, and other project records in the grantee's own internal files instead of relying only on DRPT's systems. This ensures records are always available for audit or review. We also identified issues related to insurance coverage. Article 13 of DRPT's master agreement requires that insurance purchased by the grantee, its agents, contractors, or subcontractors shall list the Commonwealth, the Department, the Virginia Department of Transportation, and the officers, agents, and employees of these entities as additional insureds. During our review of insurance documentation, we observed that DRPT was often not listed as an additional insured. To clarify, an additional insured is a person or entity that is covered under the policyholder's insurance for claims arising from the policyholder's actions or operations. This provides important liability protection for DRPT. It's also important to know that this is not the same as being listed as a loss payee, which pertains only to receiving claim payments in the event of damage or loss. For state-funded assets, grantees are not required to include DRPT as a loss payee, only as an additional insured. To prevent these issues in the future, we recommend the following actions. Review all current insurance policies and ensure that the Department of Rail and Public Transportation, the Virginia Department of Transportation, officers, agents, and employees of these two entities are listed as additional insureds. If the required coverage is not included, work with your insurance company to amend your insurance policies. Vehicle disposals are another recurring area of concern. Here are some rules for vehicle disposal. Accurate vehicle disposal information is required to be entered into the DRPT Transam system. This system allows DRPT to confirm that vehicles are being properly disposed of and ensures that any sale proceeds are managed in accordance with applicable regulations. If a vehicle is being disposed of before it reaches the end of its useful life, grantees should coordinate with their DRPT program manager to determine the appropriate next step. The following requirements only apply to transit and agencies receiving pass-through FTA funds. Grantees must receive permission from DRPT before disposing of vehicles funded by state and/or pass-through FTA funding. As outlined in DRPT's Grant Administration Procedures, Section 12.4, for vehicles that have met their useful life, were purchased with Section 5311 funds or other federal assistance and are no longer needed for transit purposes if the vehicle is sold for $10,000 or less. The subrecipient may retain the full proceeds. If the sale exceeds $10,000, the subrecipient may retain $5,000 plus the state and/or local share of the amount above $10,000. Any remaining balance must be returned to DRPT, who will forward the funds to the FTA. We have seen several cases where there are vehicle disposal discrepancies between a grantee's internal records and Transam. Examples of discrepancies include vehicles shown as in service in Transam, but are marked as disposed in the grantee's records. Vehicles disposed date did not match Transam and the grantee's internal records. Disposal proceeds recorded in Transam did not match supporting documents. Also, the federal share of disposal proceeds was not returned to DRPT for remittance to the FTA. To ensure compliance with vehicle disposal requirements, we recommend the following actions. First, assign responsibility to a staff member for data entry and verification in Transam. Second, establish a deadline, for example, within 5 business days of sales for completing Transam updates. Third, conduct periodic checks to correct any discrepancies between internal records and Transam entries. Fourth, for vehicles disposed above $10,000, work with your DRPT program manager to determine the proper amount to be returned to the FTA. Fifth, promptly remit to DRPT the FTA portion of vehicle disposal proceeds. By following these steps, grantees could stay compliant and avoid audit findings related to vehicle disposals. Vehicle maintenance is another critical area that requires close attention. The FTA allows recipients to set preventive maintenance intervals based on manufacturer recommendations, vehicle age, and operating conditions, but requires that recipients must have a written vehicle maintenance plan describing a system of periodic inspections and preventive maintenance. The plan should specify defined maintenance intervals. What's more, Grantees that receive only state funds must also properly maintain assets to ensure proper running condition and vehicle safety. However, during some reviews, we found that grantees have vague policies that do not specify maintenance intervals. Additionally, maintenance is sometimes done outside of required time frames, such as oil changes not occurring at the required 5,000-mile interval. To mitigate these issues, we suggest that grantees revise their written maintenance policy to include clear, defined vehicle maintenance intervals that are based on manufacturer guidelines. Develop a system to track and ensure timely maintenance, for example, by utilizing scheduling reminders or alerts. Set a quarterly internal review process to evaluate whether preventive maintenance is being performed on time and investigate delays. Having a detailed maintenance policy and following it helps extend vehicle lives and keeps your fleet safe and reliable. Inappropriate travel expenses submitted for reimbursement are another common audit finding. According to DRPT grant administration procedures, travel expenses are reimbursed only up to the state and federal approved rates for lodging, mileage, and per diem amounts. The Commonwealth of Virginia uses federal GSA rate for lodging and meals and incidental expenses, as well as the IRS mileage rate. Meals for same-day trips are not reimbursable. Reimbursement for meals applies only to approved overnight travel. Lodging expenses must be reasonable, necessary, and follow GSA lodging rate guidelines. Rates exceeding GSA limits, as well as related tax and fees, will not be reimbursed. Additionally, all claims must include legible supporting documentation detailing the expenses charged to the project. During our reviews, we have seen vouchers where grantees submitted expenses for meals on same-day trips, which are not reimbursable. More commonly, lodging expenses exceeded GSA lodging rates and DRPT's expenses guidelines. Therefore, our suggested corrective actions for these issues are establish internal pre-travel review procedures to verify that planned lodging does not exceed GSA rates and only includes eligible costs. You can use the official GSA website to validate allowable per diem and lodging limits before booking accommodations. Grants should prohibit reimbursement claims for same-day business travel meals. Require pre-approval from the DRPT program manager for all overnight travel, including purpose, lodging, meals, and other costs. To help simplify the process of estimating travel costs, DRPT has developed a travel cost estimation template. If you are interested in using this tool, please reach out to your DRPT program manager for access and guidance. It's also important to maintain open communication with your program manager for any travel-related questions, especially before submitting expenses, to ensure they meet DRPT requirements and avoid potential issues. The final common issue concerns the reimbursement of ineligible expenses. Regarding these issues, the master agreement states that eligible project costs must be actual net costs charged to the grantee. DRPT's grant administration procedures requires that all claims include legible supporting documentation detailing expenses, demonstrating their relevance to the project, and showing items purchased or work performed. Additionally, the master agreement requires that if audit findings show payments were unsupported or in violation, grantees must promptly refund those payments within 60 days' notice. Here are some real world examples. Expenses submitted multiple times. Expenses were submitted under two different projects or twice in the same project. Expenses charged to the incorrect project. For instance, a capital project expense included in operating expenses. Expenses that were covered by another funding source. An expense where an invoice or receipt was not provided, and the appropriateness of the expense cannot be validated. Invoices for goods or services that were rendered outside of the project period. Or grantees requested reimbursement from DRPT for more than the amount shown in supporting documentation. To ensure expense eligibility, we recommend the following steps. Require two different staff members. For example, a preparer and a reviewer to verify all expenses are supported by itemized and legible documentation. The invoice data and service period fall within the approved project timeline. The cost is charged to the correct project and funding source. If an expense has been or may be paid by another funding source, the not submitted expense for reimbursement. To summarize the key lessons from today's webinar. First, separate staff duties for data entry and verification to strengthen internal controls. Second, centralize all performance and reimbursement data and reconcile regularly. Third, use validation checks and maintain audit logs to catch and explain discrepancy early. Fourth, formalize policies on record retention, insurance, vehicle disposal, and travel compliance. Last but not least, communicate proactively with DRPT and conduct periodic reviews to ensure compliance with grant requirements. By addressing these common issues, grantees will be better prepared for compliance reviews, avoid costly findings, and help ensure the successful management of transit projects. Thank you all for listening.